Because if you don't hold it, you don't own it. Exactly. I am so excited to bring to you today one of our very, very excellent specialists in the strategy that we execute here at ITM Trading. This is Keely Caul, and she has kind of a similar background to me, just maybe not quite as long, but she's been a stockbroker. She was in banking with commercial real estate, which I think is a really important thing to have under your belt these days, in insurance and in technology. So she brings a lot to the table, and we've been working together since 2019. And I'd like you to meet her, and we're going to have a conversation so you get to know her a little bit better.
Thank you so much, Lynette. So today I want to speak about and ask you some questions about the new, the millennials, Gen Z, and how they should be investing in gold and silver, as well as creating their own wealth shield like we do. So basically, the topic would be gold isn't just for bankers and boomers, why Gen Z and millennials should pay attention. So what are your thoughts on that? Because we are getting more and more phone calls and conversations. We're having more conversations with younger generations, which excites me because, oh my goodness, people are waking up, but sometimes they have some questions, right? So what are your thoughts on that?
Well, you know, I think that those younger generations are the generations that have grown up getting more comfortable with losing their privacy and also with the technology. And, you know, that is called perception management. I mean, quite honestly, they should teach you in grade school how money is created and supported. But if they were honest with you, you would go like, wait, money's created from debt? We don't have to really do anything because you and I and everybody out there, we have to work for our money. But central bankers, well, and governments, they just create debt. So I think it's critically important that any generation, whatever they are, really understands what money is and how it is created and supported. The reason why everybody needs to have a foundation in gold and silver is because physical. And this is key too, because you can't do it with ETFs, intangibles, right? Physical in your possession, because everything that we were told about, let's say, cryptocurrencies, right, that they go around the system. Well, I don't know. I think with Gary Gensler and what's going on with the SEC should be pretty apparent, if it wasn't up until that point, with all of the Wall Street products that have been developed around this, that it's truly not outside of the system. And it's also dependent upon the grid staying intact. And the grid is aging. And so we know that there are a lot of challenges around that. So, this is real money. Physical gold, physical silver is used in every single sector of the globe. So that's the other piece that's really important for people to understand, that it has the broadest base of functionality and the broadest base of buyer. And what I mean by that is it's used in the financial system, it's used in jewelry, it's used in art, it's used in electronics, it's used in medicine, it's used in space travel, and I could go on and on and on. So you have a lot of different entities that buy physical gold and silver, because even though they've attempted to duplicate the features of those two assets in a lab, they've never been able to do that, right? Whereas when you're looking at any intangible assets or instruments, stocks, bonds, cryptocurrencies, annuities, any of the other where they want you to think that you're diversified, those are all fiat money based. And fiat money is government money, by design created to disappear over time with inflation.
Which is important, because let's think about this. That was one of the things that I wanted to bring up also. our millennials, Gen Z, which all other generations as well. Sometimes I hate putting people in those little groups,
Right.
but this is, just looking backwards, so to speak, through history. The salaries and the income that these individuals are experiencing and are earning now is not keeping up with the standard of living. So back in the 60s and 70s, where you could buy a house or build a house for $36,000 and we're able to
Or less,
right?
Yeah.
And we're able to live off of one income. It takes a dual income, if not a dual income plus additional jobs, just to be able to rent. And just to rent, just to survive, and children, daycare. There's all these other different things. So it's just a struggle, and that's one of those circumstances that is because of the devaluation of the dollar.
Absolutely.
Right?
Absolutely. By design.
By design.
And that's the point that you need to keep hammering home. And yeah, you're absolutely right. My father was a developer and he built a really nice house. So 1971-ish, I remember my mother, they used to work out of the house, and I remember my mother going, he's a comer. He's a comer. He makes $12,000 a year. And this guy was an engineer at IBM. But the average wage then was about $9,500. And a family of four could live off of that one wage. So somebody making $12,000, that was substantially, more. But bring it to today, this is also, and not just in the U.S., this is actually creating a global crisis where people that are in that younger generation, in this country, we were sold the American dream. Okay, you work hard, you can achieve a lot, you can buy your own house, you can plan for retirement, you can educate your children, you can have a nice life. And now people are realizing that that's a lie.
Yes.
Right?
And it's very hurtful. It's very, and it comes from me personally. I went through the 2008 crisis and I graduated with, I don't remember, I think it was $40,000 in student loan debt. I didn't need to take it out. I didn't want to take it out. But when you go through and you go to college, you're like, okay, come to this line right here. This is good debt. This is great debt. You're going to pay it back at this very minimal rate. 2008 hit. Then I lost my job at the time. And at that point, you have to put it on hold. Well, that's just pushing it down the road, and it's accumulating interest. And that's what these individuals are dealing with at this point, too, because it's a sales. It's a sales, and it increases the education costs, too, which is ridiculous.
Yes. And there's a couple good points in there, because the government started guaranteeing student loans in the early 90s. Right?
Wow.
And if you go on the Federal Reserve Education Department website, the FRED, you can put it in there and you'll see how it just looks like a hockey stick. And that happens 100% of the time when the government decides to guarantee something, then it gets abused. When I went to the U of A, my tuition was $2,500 a year. I don't know what it is now. Whitney went to the U of A. It certainly was not then, but that was before they were guaranteeing the student loans, right? So, the cost of a college education, you're 100% correct. It is a sales pitch.
Yes.
And now all of those student loans that had been put on deferment for the last 3 years, guess what? They're coming due again. And the cost of everything is a whole lot more.
Yes, and this is something that I got out of some things that you had mentioned and that I've researched. The LIBOR to SOFR transition applies to variable interest rate loans.
Every loan, period.
Right.
But
right.
yes.
But in this circumstance with student loans, they have all of these loans coming due. They're going to be due, the end of this month, middle of next month? I can't remember exactly the date. They were pushing it back
it's
for
July,
whatever.
but it's right. But it's coming up.
So guess what? All of these people who have subsidized loans that have been pushed back for 3 years, that have all of this interest that's backed up, they're going to have to refinance that note, in my opinion, on that new rate, because that's what's being pushed through. You have to modify it at some point. You know how you have to do a modification if that happens.
Built into those contracts, see, you and I, we have no rights, right?
No.
So built into those contracts, the lender has the right to automatically shift it from LIBOR to SOFR, right? Now, with derivatives, that's a little different story.
Right.
But with anything, mortgages, student loans, car loans, credit cards, any of those things, and they've built in that safe harbor so that if you open up your student loan, and, you know, maybe this is part of a tactic. I mean, I'm not as trusting of what gets set up by the government and the central banks as some people are, but that's because I read their stuff all the time. Right? Mm-hmm. But when that transition occurs, the lenders could then send you the next statement, and your principal balance that you owe could shift because the LIBOR SOFR interest rates are different, even as they've jury-rigged it, right? Now, whether or not, it's going to depend on how obvious they want to make it as to when they're going to keep it hidden from you or when they are going to reveal it.
Right.
Okay? That's the big question. Because you know darn well, lots of things are happening underneath the surface with all of the debt instruments. Right? You know that. The debt bubble has been popped by the raising the central bank increases of the interest rates. They created that debt bubble.
Now they're wanting it to.
Yes. And because they need a big enough crisis to scare people enough to accept the next iteration of the financial system that they want to put in place. I don't know that.
Problem? What is it? Problem? Solution?
And never let a good crisis go to waste.
That's right.
Right?
And that was another thing. You mentioned something about, being able to control the narrative, being able to control the people somewhat.
Perception management, which is a real program.
Mm-hmm. Right. That's something you want to definitely read about. That blew my mind. So what I was also going to say is that we are in such a immediate, gratification.
We've been, short-termism has been,
Exactly. So with that being said, we are being conditioned, and especially the younger generations as they're coming up, right? Mm-hmm. Conditioned to say, oh, we have to have this immediately, or they're
I want that coat. I want that vacation. Right. But then maybe not even the coat, because now it's all about experiences, not assets. Don't accumulate assets.
Just
accumulate experiences, but that doesn't help you when you need money.
Exactly. You're not going to be able to trade that in or sell that back or do what you need to do. Physical assets for sure. Well, the experiences or the instant gratification, instant responses, the dopamine, that kind of thing is also going to usher in I say central bank digital currency, but also a social credit score, because everyone's going to want to be in compliance. They always want to do the best, be the best, that kind of thing. And with the younger generations, we're already used to
the likes and and all of that.
All those things.
Right.
So it's just another way to get it implemented.
Yes, and let's face it, they know, technology companies and technology and government, I did a piece on this a while ago, how they really are working hand in hand. They know how to get you addicted. Right? They know how to do this. Right. And so they use that knowledge, and especially with AI coming up and the deep fake, how is anybody going to know if what they're hearing is true or not? Takes us back to physical gold and silver in your possession, because no counterparty risk. It's real. You hold it. You own it. And there are ways to even know if this stuff is fake. Have a magnet.
Exactly.
Gold and silver are not magnetic. So even if you have a magnet, that's your first, this is real. Well, it's not. Right?
That's another part. This is, you're holding history in your hand too. That was what was cool when I bought my first coins as well. But this is what my grandparents used to give me for birthdays and just holidays. And I just thought these were the coolest things, which is
what I do too.
I've started to do it for nieces and nephews and my
Absolutely.
kids. It's fantastic. And they get excited about it. That's a totally different, But that is so memorable, and you keep it, and it's passed down. It's a great experience for you to give a gift as well as for them to receive it, and it gives you some historical background that you can teach that you're not going to get in school.
And you aren't going to get it in school. And understanding history, people with that short-termism, oh, well, that was 15 seconds ago, this is now, right? But what everybody really needs to understand is that life builds upon life. So, I wouldn't be where I am today had I not stayed inside of, banking and stockbrokering and the tangible assets. It's like this experience and the life experience, having lived through the transition in 1971, having been there on Black Monday as a new stockbroker in 1987. Having had that life experience, if you're consistently changing jobs all the time and it's not in the same area, how do you become an expert in anything?
Right.
That's my question. How do you?
You can't.
Right?
You can research and everything else, but you're not going to be an expert without those life experiences where you have to maneuver and figure out what's
exactly. That's what I like so much about your background, because it is very similar to mine. Right? In that you've been a stockbroker and you've been a banker and you've worked in insurance. So all of these very complicated contracts, because that's all this fiat money stuff is. It's just a contract that you didn't write. You didn't read the fine print. So knowing that you're not going to read the fine print, whose benefit do you think that's written in? For your benefit?
Oh, no.
Oh, no.
Oh, no.
But you know this because you've worked in all those areas, and I think that's critically important. You want somebody that understands the language.
Right, exactly.
Right? Because this stuff is made intentionally complex so that people, I don't understand that, but they must understand that. Guess what? They don't understand it either.
No.
They create these derivative monsters and these these contracts that are so complex, and they admit, and I'm talking about the ISDA, the IMF, the BIS, the whole alphabet soup, the Federal Reserve, the FDIC, they all admit, we don't really know the true value that's at risk, because they allow it to get that complicated and convoluted, and they say, if it's really complicated, nobody questions us.
That's right.
Well, it's time to ask questions, you guys.
No kidding. And with our generations, the younger generations, we have to ask questions. Like I said, we've been conditioned to not ask questions. You're just supposed to fall in line. You're seen but not heard. Those types of things. That's what I grew up with. And I was always the one that asked the questions and got in trouble. Or
Me too. I got kicked under the table.
I did. And my parents are just like, there's certain things that you do not discuss. And this is one of them. And now it just doesn't matter. But that's why it's so important for me to educate my children as much as possible.
Absolutely.
And encourage them to ask questions.
And that's why on the videos, I give you the links, not to all my research because everyone would be a book, but to those that actually make it onto the slide, and sometimes a little bit more, so that you can do your own due diligence. And that's what I would say. Don't take my word for it. Don't take Keely's word for it. Don't take their word for it, central bankers and governments. Their job is to keep you calm and keep you in the system, because it's so much easier to rob you that way. They want that compliance. And you're not going to know it at first. Right. They're going to keep it like as close to what you're used to as possible until you are so embedded in the system, and then it doesn't matter. Right. Then they're taking you, bam, read their documents. There are no limitations to how low they can put. Negative interest rates are just a choice. Oh. Right? They're a choice. Yes. They're not really a thing. Mm-mm. Well, why are you going to work your butt off, loan somebody money, and agree to take back less than what you loaned them?
This is true.
The only one you're doing that for are your kids. Right?
That's the truth. Right? You're right.
It's the only one you're going to do that for.
That's true.
But they're trying to tell you that this is real. But once they take us to CBDCs, they have said, the central banks have said, they can have their finger on the button of the economy 24/7. Because right now, from policy to when it trickles through to the economy, takes 12 to 18 months. But once they have CBDCs, then they'll do it in real time. And if you're not spending money, because we're a consumer-driven economy, you're not spending money, well, then you'll sit there and watch your principal evaporate. And what are you going to do? You're going to go out and put it in anything that you think is going to maintain its value better. Look at Zimbabwe. Did you see their stock market's up over 600%?
Oh, no, I did not see that recently.
Oh, yes.
I'm so sorry.
No worries. That you know why? Because people are fleeing the currency that's losing its value. Now, they've come out with a physical gold coin, but who can afford that? Just the elite.
That's true.
Not the general population. They have now come out with a supposedly gold-backed digital currency, except you cannot convert it into the gold. So who trusts that it's there, right? Unless you can convert it,
Right.
it doesn't mean anything. So the population has lost all confidence in them. So what are they doing? They're running to the stock market. But the problem is the only thing you can convert your stocks, bonds, annuities, all that crap into are Zimbabwe dollars. And last time I checked, 1 trillion times zero is still zero.
Right. That is, you see, blows my mind.
It-
It has to blow everyone's mind because in the U.S. we have not experienced this type of devaluation, revaluation to this extent.
Well, at
Where-
least in our lifetimes,
lifetime.
because the Revolutionary War,
Right.
the War of 1812, and there was one more.
Well, they don't teach you about that in school anyway. So in our generations or what we have experienced, nothing has happened in
Correct.
like this.
Correct. That's why I'm so glad to be 68. I'm serious, because I was like a teenager when we transitioned from the gold standard to the debt-based standard. And I remember, they're just repeatable patterns. Just like it is quite clear, I'm sure, to all of our viewers that you are at a much different stage in your life cycle
Right.
than I am in my life cycle, right? Well, currencies and economies, it's the same thing. You just have to know how to recognize the pattern.
Right. Exactly. And I know I didn't grow up knowing all of this about gold and silver until
Right.
I started questioning things in the banking industry. When
Right.
I found out the bank president owned gold and silver, I didn't understand exactly why, and I just kept pressing. So that opened up a bunch of doors for me to research. But you learned from Uncle Al, is that correct?
Oh,
And
yes,
I would love
my
to hear
Uncle
that
Al.
story and let them as well.
Okay. Understand that this was in the 60s. And at that time, it was illegal to hold more than 5 ounces of gold.
Say that one more time, because no one, when I talk to people on the phone, they're like, illegal? What are you talking about?
Right. Well, in 1933,
Right.
right here, okay, let me back up to move forward a little bit.
Okay.
All right. Because when we were on a gold standard, and you could go into the bank with a $10 bill and walk out with a half an ounce of gold, or a $20 bill and walk out with an ounce of gold, right? And so what that did was it gave the public power over the government. Because if you did not like what they were doing, you would walk in with the bill and you would pull gold out of the system, and then that created restrictions around how much debt the government could grow. So the public had the power. Plus, if they wanted to tax you on a gold standard, you'd know it. And so they wanted a way to be able to tax you without you knowing it. Additionally, corporations wanted a way to pay you less, but they knew if you were used to getting $10 an hour, you were not going to accept 5.
True.
If, however, you could make that $10 spend like 5, then the profit margins would go up and you would not know that you were actually getting paid less. So this goes back to what we were talking about before. So in 1933, they took the gold away from the public. It's still, and they revalued the currency. So it was still kind of backed by gold, and foreign governments could convert their dollars into gold, but the public could not. Right? So that's when the shift really, it started to occur in 1913 because they shifted it then too.
Right.
But that's when the shift occurred. So between 1933 and what was it, 1980, well, it was 1971 when they removed the backing. I think it was 1986 when the first coin was, gold coin was issued.
I think you're right. I think that's right.
Okay.
Yeah.
So by 1968 though, and when they confiscated the gold, other than in pre-33 form, which is that coin there, right?
This one right here.
Because Treasury Secretary Wooden, knowing what they were doing with the currency, knowing that they were going for devaluation, he and his friends wanted to continue to accumulate gold quietly and unobserved, right? I mean, if you were a jeweler or you were a dentist, you could certainly buy gold, but everything was viewed.
So he owned this type of gold.
Correct. And he wanted to continue
To own.
and accumulate it. Legally. So he wrote the caveat in there. But for everybody else, you could accumulate in that way, but for everybody else, they, because people don't read the fine print, they thought, okay, well, it's just an old relic now, and I can't hold it more than 5 ounces. But my Uncle Al was a major antique dealer back east, and he was my favorite uncle, so I was very close to him. And so he taught me how tangibles move. But my parents and I were at his house one day, and he said, come here, I want to show you something. And he took us into a back bedroom where he had 2 tall floor safes. Now, I was 10 years old. It was 1964. And I was 10 years old at this time. And I can't tell you that I understood the importance of that experience. But he opened up these safes and he said to us, if anything should happen to Aunt Bertie, or to me, Aunt Bertie, his wife, would be well taken care of for the rest of her life because of what's in these safes. So I turned around and looked. Now, I didn't understand how much was in there, but you couldn't fit even one more $20 gold piece in it. So he had the kind of gold that required no overseeing to legally accumulate it, and knowing now how much that was, my bet would be probably 3 monster boxes in each safe.
Wow.
So probably at least 3,000 ounces, when in any other form, it was illegal to hold more than 5. This is critical because you could use it in the normal marketplace, whereas any other kind of gold you couldn't at that time. And with what we have coming up, there are going to be so many opportunities if you can hold your purchasing power.
Very true.
To grow your wealth. So not just sustain it, but to grow your wealth.
Absolutely. So that's why we talk about the shield is made of metal, not of paper. So,
or promises.
Or promises. That's for sure. I have questions from all walks of life, all different ages that don't know what they don't know. It was done by design. So with that, we know the last 30 years, we have an idea of the future just based on what's coming down the pike. But what would be the very best advice that you would give someone like me or younger or anybody, but
anybody, because really so much of what I do is frankly about my children, my grandchildren, my great-grandchildren. I figure I'm going to live another 32 years. So I'm old, but they're going to live a lot longer than that. And if any of you, and if you haven't, I would suggest you look at the World Economic Forum.
Oh, yes.
Who says you will own nothing and you will be happy. But here's the reality. The reality is that somebody owns every single asset on this planet, right?
Yes.
And if you don't own it, that means you got to rent it, whatever it is that you need.
Which is happening now.
Correct.
can't afford to buy anything.
Exactly. And who dictates that rent?
Well, it's the owner of the property. And then,
exactly. So opportunities, there's always opportunity in crisis. So what I can tell you is, number one, you have to be as self-sufficient and independent inside of a community as you can possibly be. Because if you are dependent upon the government and the central bank, then they're dictating everything. Hello, social credit score. Hello, renting everything.
Right.
Hello, surveillance economy.
Right.
So that means that you need to have food, water, energy, security, barterability, wealth preservation, community, and shelter. Now, where I started is if you've managed to accumulate or if you haven't managed to accumulate. This is the foundation of your money. So even if you haven't managed to get everything else done, for me, silver is about barterability,
Yes.
right? Gold is more about wealth preservation and opportunity positioning. But, you want to set this foundation, but then you need to make sure that you have every other base as much as you can. And it's daunting, right? You go, oh my God, how am I going to do that?
Yes.
Well, how do you eat an elephant?
One bite at a time.
Voila. So you look at, where am I most vulnerable? If you don't own any gold and silver, that's where you're the most vulnerable. And there are different sizes to accommodate different budgets and all of that. And Keely can tell you more about that. And gold and silver in any form, you need to understand, is monetary at its base. Okay, so there are a number of ways to accumulate no matter what your circumstance is. And then you want to stand back, okay, where am I the most vulnerable? And you build that in. And then you step back again and you go, okay, where am I most vulnerable? But if you can also find a like-minded community.
Yes, absolutely.
Right? Then, because it takes a village.
Exactly.
Right? One person can't do it all by themselves.
Right.
It just doesn't work.
Doesn't happen. That's why so many people, when they call in to ITM, there's only so much that we can share on YouTube. But once they call in and speak with us, they're like, okay, these people are my people. I am their people. And then they just talk, which brings me to something else. And then I want to ask you. So this is from, and I shared this with you. Mr. Ron sent this to us, and it's his fortune out of his fortune cookie. This is from a few months ago.
Oh.
And he said, I want to make sure that you keep this. And it says, if not from trees, where does money come from?
Oh.
And he kept it for us, and he sent it in, and Mr. Ronnie's been a client of mine for years. But it makes sense, right? So like-minded people understanding that it's worthless, right?
That can you want to see where money comes from? Right? They just print it from debt. That's what they do, right? And because it's so abundant, I mean, there's an unlimited amount that they can create, an unlimited amount of debt that they can create.
That ceiling.
Exactly, suspending it, what have you. But what that also means is every time they do that, the value, the purchasing power value of the money that is already out there declines. Exactly. And you know that because of inflation, the cost of everything. Now, this stuff takes energy and effort to pull out of the ground, to mine it, to mint it, right?
Right.
So when we're on a gold standard, you're trading your labor for their labor. Here you're trading your labor for debt, and it's declining, right? It's declining. And I mean, and we're in a bad way because the increase in the interest rates is popping that debt bubble because we have to transition into a new system. We're at the end.
Right.
It really is. Look at the purchasing power chart on the Fred, and you'll see we're at the end.
Or just look at your grocery bill. You can't go into a store without walking out with an armful of groceries for over $100. It just doesn't happen.
Easily.
And I'm not talking about extras. I'm just saying basics.
Well, look, I mean, these days, this is so sad, but these days people are using those new debt accounts where you can break it up into 4 payments for their groceries, for their necessities.
I know what you're talking about too. I see it all the time.
Klarna, Affirm, I think are a couple of them.
There's a lot. Oh, just break it out to $40 over 12 months. And I'm sitting there going, $40 a month for 12 months. It's like, oh my gosh, people are actually using this.
To buy food.
Right.
Right? You're not talking about even buying a purse.
I love purses.
I do. And that's bad enough. I mean, if you can't afford the purse, don't buy the purse.
Don't buy the purse.
Right?
Right.
So, you've got to, the short term it goes back to I want it and I want it now. And that's really, if they have their way, whatever equity you do manage to accumulate will be put into digital form and broken down into itty-bitty pieces. Right. So rather than them coming in and taking it away from you, which you would notice, they will encourage you to spend it.
Kind of like,
and then who do you complain?
Kind of like some buttons, right? I tell this a lot.
Yes.
You have to say it because I butcher it every time.
Oh, all right. Well, it would be like if I went into your house every day for 30 years and I took one button. At the end of 30 years, I'm going to have a lot of your buttons, but you're probably not going to notice it. If, however, I go in today and I take 98% of all of your buttons, when you go to get dressed tomorrow, you're probably going to notice it. So that's the difference between inflation and hyperinflation.
Right.
Right? Mm-hmm. And it used to be, I remember a day when inflation was a bad thing. Then it became a good thing, right? Because it makes things it creates nominal confusion. Right. So it makes things look like they're worth that much more when it just really hides the value of the currency's decline. Right?
Yes.
Now it's a bad thing again because fast inflation, people notice. Exactly. Slow inflation, you don't. And they call this price stability. You know what price stability is? Now, you would think that means, well, the price of bread or eggs or whatever just stays stable, right? Price stability. No. That's wage price stability is what they're really talking about. If inflation is at that 2%, you don't ask for more money in your wages. But when it ratchets its head like it has and it's much more quick, well, what do we see? We see higher wages, and they don't want that. It's okay for that income and wage inequality for corporate presidents that used to make 20 times their worker to make 3,000 times their work. That's okay. And corporate profits at all-time highs, that's not causing inflation either. This isn't causing inflation. Oh, no. It's wages. It's people asking, how dare they ask for more money? How dare? Hey, didn't one of the chief guys over at the Bank of England said, stop crying about it. Just get used to it. You're poorer. I mean, do they even think about what comes out of their mouth before they say it?
Apparently
oh my God.
Not,
Sometimes they don't.
Sometimes I just think, some of the things. I mean, everything. I mean, it's hidden in plain sight and they say it out loud, but they right over the heads of a lot of people unless they're actually looking into it. But they have individuals so scared to lose their job, so scared that they're not going to be able to make their bills or do anything that the people are down, just head down, keep working because that was the mentality.
Or stop.
Right.
Because that's really a global phenomenon that's happening. In China, they call it the lay down generation. Look at all of the loss of, the quiet quitting. I mean, it's people they don't step up because they see that they can never achieve the American dream. They can never achieve the Chinese dream. It's happening all over the world where the younger generation is just really disappointed because no matter what they do, they can't achieve that. And and that's because we're at the end of the currency's life cycle. Right. That is really one of the key things that you just can't.
Right.
Because there's virtually no value in the currency left. And that's the only thing keeping this whole thing together to this point is the public confidence. Because the rest of the layers of confidence are gone, and gone. Bank to bank, central bank to central bank, and as of last August, markets to central bank. Remember that saying, don't fight the Fed?
Right.
Now you got the markets fighting the Fed, which is why we have all these dislocations, because we're at the end.
Right.
It's just that simple. So you want to be in a position to weather it? Right here. This is your start.
Right. And like I said before, you have a community with us at ITM, but there's also something that Lynette has as well, and it is Beyond Gold and Silver. So if you have questions about that, she can review it right now, because I am the gold and silver person, and I get questions about it all the time,
Right.
and I never know exactly how to answer.
You've
it.
been to my house, right?
Absolutely. Oh my gosh, y'all. It
Okay.
is fantastic.
So I started an urban farm,
Right.
So the Beyond Gold and Silver deals with food, water, energy, security, a little bit of barterability, community, and shelter, because these are all the things that we need to sustain a reasonable standard of living. Right? So wherever you are, the goal with that YouTube channel is wherever you are, we want to meet you. If you're in an apartment and you don't have a lot of land, okay, we'll show you how to grow food on a shelf, on a normal size bookshelf. You know, if you do have land, okay, I was not a gardener when I started this, but I knew how critical it was.
Right.
You know, solar, how can you keep your energy going? You know, so it hits on all of those things. And then inside of that, we have the Thrivers community.
Which is really cool. I'm a member of the Thrivers community, and I see all different articles on there. I'll comment from time to time or share the newest video from ITM. So I've really gotten a little bit more involved than I was a few months ago when everything launched. But it's been really neat just to be able to see that.
Isn't it? Because what's really happening is everybody's coming together there, whether they're part of ITM or they're not part of ITM.
Right.
Right? And they're sharing their experiences, their expertise. So that's what a community does. It comes together and it helps each other.
And it's all over the nation.
Yes, it's actually all over the world.
Okay,
and we just set up groups too. So if you live in the Northeast.
Oh, I didn't know that. Okay,
yeah,
that's
it
fantastic.
just happened just a little while ago.
Okay.
So wherever you are, so there is even an opportunity for people to physically come together.
That's what I was going to ask you about that later. Okay, so that's
That's
good
what
to
people
know.
are asking for.
They are. They want to know where in their area are people that are like them that can help them. And that is something that I am so happy that's been done.
Me too.
That's
Me
fantastic.
too.
So,
Right.
well, other than that, I think we've covered about everything. Thank you for answering my questions.
It is my pleasure. Thank you for asking them, and thank you for being here. This is great. So Keely Caul, she's awesome.
Thank you. Lynette Zane. Awesome.
Until next we meet, keep in mind, wealth shields are built of physical metal in your possession, because if you don't hold it, you don't own it. Exactly. And until next we meet, please be safe out there. Bye-bye.